This is a Channel Africa podcast. You can also get Channel Africa on satellite PAS 10, DSTV audio bouquet 802, and OpenView bouquet channel 628.
Fitch Ratings has downgraded Afreximbank to junk status, citing Ghana's debt restructuring and losses linked to a $750 million loan as factors that have heightened the bank's risk profile. Now, following the downgrade, Fitch also withdrew Afreximbank's future ratings, bringing to an end what it described as a strained relationship with the African Trade Finance Institution. Meanwhile, the African Credit Rating Association, ACRA, has backed Afreximbank's decision to terminate its relationship with Fitch. For more on this, we're now joined on the line by Dr Sifiso Falala, the president of the newly formed African Credit Rating Association. What is your take on Fitch's decision to downgrade Afreximbank's junk status?
Well, the optics don't look good. I think one needs to have more insight into what actually transpired, because we see that Afreximbank decided to actually do away with the relationship that they had with Fitch prior to the downgrade. And I think this is where it becomes a bit messy, because had the relationship still persisted, then we might have seen a totally different outcome. I think many observers and financial institutions would be having question marks about the sequence of events.
Dr. Falala, being in support of or backed Afreximbank's decision to terminate its decision or this relationship with Fitch, are you saying the concerns raised by the rating agencies, such as elevated credit risk, weak risk management policies, and uncertainty over how the bank handles stress situations involving sovereign borrowers, are not justified in your view?
Yeah, Innocent is a very complex dynamic, and the sequence of events is very important, because it's difficult for us to say that we are backing Afreximbank in its decision, because there are many factors that led to that. But what's important to note is that the decision to terminate the relationship seems to have preceded the actual rating. The rating came as an echo to that decision, and this is where it does seem a bit untidy. And what's important, and what we've been saying as a credit association that is based in the continent, is that there are many factors at play. And one of the reasons that could have accounted for the decision made by Fitch to downgrade could have been the fact that the traditional agencies tend to have a kind of Wall Street balance model when they look at their ratings and calculate the risk therein. Whereas, in fact, when you look at Afreximbank, it is a multilateral structured type of institution, which is backed by many governments across the continent, but also has deposits in the excess of $7 billion from financial institutions and from markets. So the complexity of the bank is such that it's very difficult to understand why, for instance, if you look at the Chinese rating agency that currently rates Afreximbank at AAA, which is a very lucrative and attractive rating, and the Japanese JCR rating agency, which also rates Afreximbank at AA-, and Moody's, which is similar in nature and outlook to Fitch, rating them also at investment grade. And then if you take into account the fact that there has been a breakdown in the relationship and communication between Fitch Ratings and Afreximbank, then you just wonder how much information Fitch Ratings have to actually base their decision on, especially given that comparable organizations differ very strongly in their perspective and outlook to Fitch Ratings.
Indeed. And Dr. Falala, Fitch says it has withdrawn all future ratings due to a strained relationship. As an association, aren't you worried about the implications of Fitch ending its rating coverage of Afreximbank? And I'm asking this because you and I had a chat about this during the launch of ACRA, that part of the work that you must do is to really give a correct assessment of what's happening on the ground. Aren't you worried about the implications of Fitch ending its rating coverage?
I think it works both ways. It's worrying for Fitch, definitely, and Fitch did ring the bell. And as they say in markets, once you have rung the bell, you cannot unring it. And markets have moved on the back of that rating, and the dialogue and the conversations around Afreximbank have changed. The investors have noted this. So the dialogue shifts, and Fitch themselves would be worried about the implications on their own reputation. But certainly, if you look at the South cooperation that is emerging now, the Western markets are no longer the only source of capital and funding. And we are seeing a rise, for instance, in funding from the New Development Bank under the auspices of the BRICS nations, and Asian finance also coming to help African countries finance imports and exports and development of industrial output. So the actual assessment of risk on the African continent is changing, and Fitch is no longer one of the major players by virtue of withdrawing their ratings and exiting. And in fact, the growth of Eastern Asian markets is very significant in this case, particularly seeing as their ratings differ markedly from the ratings that are issued by Fitch. So this action is more likely to have a bigger impact, certainly in Africa, on Fitch itself than it would on African market and multilateral institutions such as Afreximbank.
Dr. Falala, it's going to be interesting to see how the other rating agencies deal with with Africa's unique developmental agenda, and it's going to be interesting again to see how these methodologies fall short. Dr. Sifiso Falala, the president of African Credit Rating Association.
That podcast was courtesy of Channel Africa, the African perspective.